Yeah, I think they crank it down in the afternoon.
We crank it down for,
Can we just say that? I love that song.
let's do
That
it.
that reminded me of that movie with, oh. They acknowledge. They acknowledge. They found.
He's so deep in there, people back. There's a lot we've done. Last Friday.
All right, your Zoom's going.
What's the button to change this
Should
screen?
be
This slide.
these little guys right here.
Okay, cool.
So you can just look at,
Oh, nice.
go
Okay.
to the next one.
Cool.
I can turn this though, so that you can stay on that side. you know?
Yeah.
Yeah. Convenient.
It's a little tool. You can photocopy these. We have some more if you're doing like an open house. And I can restock also when I go to Jacksonville. Thank you, you too.
I'm really hoping this are you gonna stand or sit?
Do a little everything. It might be just
Okay.
a little role playing.
Oh, gosh, I like it.
Night. Everybody's used to it, right?
They should be. They're here with us. I
Is
just
it
want to
too
move
close to
this
the Zoom.
forward. So they don't just see the side of you.
The pores of my.
No. No, no, no.
Oh, man.
Yes, let's just see. I'll always pull this out a little too. There we go.
Scott's coming in here too, so he's talking to. Justin.
I just wanted, Tara was on. But if someone shows up, it will just show up in the middle of the screen and say, so-and-so's, oh, here it is.
That's what
See?
I asked
Two
Stephanie.
people entered the room. I'm gonna say view,
Like Stephanie, how do you get?
admit.
Do you know how?
Admit.
Stephanie,
To get them.
like Josh, how do you get in the room? Somebody.
I'll come
Do I
back
just
and
click,
help.
I just click on, like Chantrell?
Right, so a little thing popped up and said people are trying to get in the room and you just click that and then you
Okay.
just next to them. It will say,
Oh, good to see
Admit and
Chantrell.
admit.
I haven't seen. Gotten connected
not
to her in a while.
fun.
Yeah.
So
many were here.
We didn't pause it, did we?
Stick around.
Oh, it only goes for so long, gotcha. When you're all done, let me know now.
You'll see Scott will come in here with his experience and it's just constantly changing. The loan flow, not just with us, but the industry overall. But let's go ahead and jump in. Thank you guys so much for coming. I know it's like a marathon, I think, for people after a lunch. You know, so they're like, all right, we made it this far. Tapping out. But this is definitely part of the process as you guys are, especially coming in the industry, you're getting hit with so much stuff. And then you have a client that asks you a loan question, which is not covered in Ignite, which is not, because it's not supposed to be. So one of the things that drove me nuts when I started on the mortgage side, I've been here 5.5 years at this location here. And nobody kind of, as you can tell, I'm kind of on my own down here. My branch is in Jacksonville. And I didn't know what not to pay attention to. So I paid attention to everything. And it just burns you out. Like, because you're trying to get everything right. I need to know everything. I don't want to look stupid. That is one of my biggest fears, personally, is I hate looking stupid. I can know that I don't know the answer, but I hate everyone else knowing I don't know the answer. So when I first started, I would be swamped with real estate answers, contract answers that have nothing to do with my job, nothing to do with my training, and even some legal boundaries that are difficult. So one of the things, we're not doing a commercial today for Bank of England. This is to help you guys walk through the process, get an overview, and then what should you know versus what the lender should know? What's their job? What's your job? And then we might be able to have some role play also. Have some fun with that. I know, get a little nervous with role play, but we're gonna have fun with it. But so in the last 5.5 years, we've seen a lot of swings. Definitely in the industry and in this branch. So I believe Justin is the 4th team leader since I've been here. And I can say without hesitation, head and shoulders with what he brings to you guys. Professionalism, knowledge, awareness of the industry, besides credibility of being the DUR president, things like that. But one of the things he also does is he communicates with me about what you guys need from a lending side. No other team lead has ever done that. So he'll have meetings with me like, hey, this new thing came out on mortgage hacks. I really think it's gonna be good. I want to streamline it. And one of the things that he talks to me about is just helping us understand the language, helping us understand the process. How do you get started? And then what are some of the challenges? So we're even gonna have a little vocab session to walk through a little bit here to cover some commonly used language that loan officers like myself begin to think, even though we didn't know it at all when we first started, that it's normal language. So you can find yourself getting a question from your client. So he was talking to me about DTI, and you're like, okay, I'm gonna bluff my way through this so I don't have to ask. And the loan officer assumed that everyone knows that, but it's language that only you use during the loan process. And just want to expose you guys to some of that stuff. But a little background on myself. Like I said, we've been here 6.5 years. We're Floridians, back 4 generations here, which means it's kind of like if you have generations from Australia, you know, there's some runaways there that made it down to that area. So if you came to Florida 4 generations ago, there's some backstory to that for sure. But I've lived all over the world. I grew up, my first 7 years were in Papua New Guinea. Which is one of the most primitive places in the world. I think publicly they ended cannibalism in 78 there. I was born in 76. So that was my introduction to the world over there off the coast of Australia. And then my parents moved back to Florida. So back to Miami, which is a whole different kind of jungle. And then the wildest jungle to get me out of South Florida, because I needed to get out of there because I bring the jungle with me sometimes too. I went to a town called Searcy, Arkansas. I found a school that would let me play sports, but had tight rules, and it was in Arkansas, Searcy, Arkansas. And I was there for 2 years, and then we brought Miami with us. It was a no drinking situation, and I hadn't worked all the partying out of my system, so I recruited a bunch of friends with me to play football there with me, and we were throwing parties and had to leave for a semester because we got caught. And that brought me to the Daytona Beach area. I was taken in by a local pastor who, because my parents were kind of done with me at that point. I'm a man, figure it out type stuff, which was good for me. And went to Daytona State for that semester. And then went back to Harding. My wife, or Amber at the time, had left UT. And she'd gone to, she grew up in Memphis and went to a school, Harding Academy, which is not directly affiliated, but the names are, obviously closely connected. And we met there after I came back that semester. So she's 2 years younger. And she, if you don't know her, she is an agent here. And this is Amber. She was on the ALC, so you've seen her around here a lot, and has just gone back out by herself off a team right now. We've been married for 23 years, and we were married in 2000, so it's always easy for me to remember. It's a little hack. If you can time your marriage to be on the, yeah, it really helps. This is a couple years ago, but I have 3 sons. My youngest is Hudson. He is a 9-year-old at Spruce Creek Elementary. Brock is my freshman in high school at Spruce Creek High School. And then Landon's my oldest. He's a junior at Spruce Creek High School. And then this is Magnolia, our dog, which is a big part of our family also. Actually, also part of Amber's marketing. You guys have pets, you know how you can use those in marketing. She's really good about doing that. In a market like we're in right now, it is an opportunity. There's space right now. Yeah, it would have been great if you came in the market 2 years ago because stuff's just on fire. But what we're finding in my industry is people forgot how to do their jobs during that season. So people in my industry who came in during that time never learned and put roots down. So now a lot of them are leaving my industry right now because they didn't get roots in, they didn't have space, and they thought it was easier than it really was. We're in a season right now, and I'm doing this too, of, okay, what do I need to learn right now? How can I reinvest in figuring out things that the people I respect, who are my competitors, do? Because I want to know who they are. I actually have relationships with them, good relationships, because I want to learn what I can from them. And then what are some things that I need to shore up for myself in seasons like this? So in a crazy market, you wouldn't have time to be in here right now because you wouldn't need it. But this is an opportunity to really separate yourselves and begin to separate yourselves from your competitors, to know enough about the loan process to where you can understand why it has value, which lender you're working with, and what is your client going through. Now, for me, when I have an opportunity to work with your client, I absolutely see that person as your client, because my number one client is not the borrower. My number one client is the agent or the team that brought me that person. Because from a business standpoint, who am I going to keep working with? Definitely, you're the person I'm going to keep working with. So I want to be able to help you communicate to that person and understand what they're going through outside of the real estate side. So one of the things we're going to talk a little about, like I said, is vocab and loan officer language. What do these words mean? What is a pre-approval versus a pre-qualification? Now, and we're all in an industry that's incredibly litigious. Lawyers are all over it, but there's gaps in the industry that you'd be surprised by. For example, a pre-approval versus a pre-qual, there's no governing body that tells you what a pre-approval is and what a pre-qual is. So it's not uncommon for an agent to have a listing and receive a pre-approval, but it's really a pre-qual. So we're going to talk a little bit about that so you can navigate that a little bit more, and then talk about our flow to the process. So you have a question, Stephanie?
Oh,
All right.
okay.
So let's jump in to, let's start first before this on what happens, Lance, when I have a referral. Now, I'm just going to talk about my process, okay? So I streamline the way I engage your referral based on what you want. So, for example, if Stephanie and I are working together and she lets me know, hey, Lance, I had this person I'm talking to. I would then ask her, can I call them? Do you want me to text them? Do you want them to reach out to me? If it's them reaching out to me, we give it maybe 3 days. And if I haven't heard anything yet, say, hey, we haven't heard anything yet. Do you mind if I reach out to them? Then most lenders today are going to have a link to their online application. So what I'll do is talk to that person, or some people I've actually closed loans with now where I never have audible conversation with them, especially millennials. Because they speak a language, but they don't find it necessary. A lot of them. Sorry for that broad paintbrush right here. But a lot of times they'd rather not. It's just an inconvenience for them. So really kind of streamline that process based on what they want. So sometimes they'll just send me a email address, and that's really all I need to then send them the email link. Once they click into that link, and it begins to prompt them through the process. To get to that point, there's a lot of roadblocks that agents have. One is, well, I don't know, I think my credit's bad right now. I want to buy, I have good income, but I think my credit's bad right now. I think a certainty is not a certainty at all. So one of the things that the role of the lender to do and to offer your client is to remove the uncertainty. So there seems to be a moral crossover implied with credit score, right? And it is not true at all. So some people will feel more anxious about you seeing their credit score than talking about anything else in their life. So for those people, they want to talk a little bit first. And that's not a conversation where you have to get them over the hump. These magical phrase, well, I know somebody who can provide a free assessment for you if you just want to talk to them. And typically when I get interaction with somebody on the phone, we get to a place where they see it's comfortable, they understand, we're not sharing this information, it's protected, and I will not share this even with the agent. They have to share that with the agent if they want to. And it's almost like a counseling process. What it allows us to do also, let's say most of our programs, the minimum score is 620. There are lenders in the city that can go 580. That conversation is often, well, how do you know what your score is? And then we'll get into that. Well, we can at least do an assessment to figure out the plan. So let's say you don't want to buy this year or this month and want to wait a year from now. All of a sudden that pressure valve is just getting released more and more. So we had all that pressure in the first conversation. Now they realize I'm not trying to sell them. I want to be a guide, a partner to walk along with them, not to sell them on something they don't want to do. And the pressure gauge begins to get released when they realize, okay, this isn't a deal to get me to buy a house next week. This person still wants to talk to me, even though they understand my credit score might not be where it needs to be right now. But what I can offer them is an assessment of where we are. We're not discovering an unknown. We're discovering what is right now. So whatever they're afraid of, it already is right now. It's not something that's going to happen to them when they see their credit score. The credit score is already what it is. We're just revealing what is for that person. And then once we find that common ground right there, I would say 95% of the time, they allow the assessment to move forward. And what that allows us to do is get in a situation where if they don't have the score they need, we can get a plan in place. One of the things that we offer and most lenders offer, if they're competent, is a rescore plan process that's free. And all that is it comes when we pull a credit score. What comes up is estimated points for improvement if they wanted to. And then based on an algorithm that we have, it brings up a plan. And it's stuff like no human being could think of. It's like, go to this card number 1, pay it down 120. Go to card number 2, pay it down 340. Now go back to this card and pay it down a little bit. And my son right now is taking one of these SAT classes to beat the SAT. It's kind of like that. It's like a trick to beat the system. You're not cheating. You're just operating within the system. Yeah.
This is totally off subject, but I need that SAT information.
Okay, cool. Yeah. Yeah, we'll definitely do that for you. Yeah. Man, it is not a good ride to the SAT class on Saturday morning. I'm gonna warn you about that.
Yeah.
My son pouts the whole way, but hopefully it pays off. Other roadblocks. I just think the housing market is high right now. And they get the idea that they're the only one who figured this out. They won't say that, but they feel that way. And when it drops, then I'm going to begin the process. Well, you guys have already been dealing with that in real time. What are some things that you guys do when that comes up? What are some things you share?
I always.
Scott, go ahead.
Go ahead.
I just tell them that the prices and the rates may not come down. And the sooner they get on the train, then they'll at least be leaving the station. They're not sitting on the sidelines indefinitely.
Absolutely. Great.
And I always talk about too, like, it's not guaranteed, right, that they're gonna come down, but if it does, we can then plan for refinancing later down the road or something like that to save on their payment.
Great. We take the rate.
I would say marry the house, take the rate.
Yeah, it seems to work a lot. That phrase, people get it. Somehow it's just perfect, they get it and they hear that. Yeah, and the only thing I would add, if it gets a little tougher, do you think you're the only person thinking this? Because right now you can operate in a market where it's not 15 offers on a house. I do see people accepting that rates are in the mid to high 6% now. The issue that I'm seeing is not the rate anymore, it's inventory. So we have these multiple challenges to navigate, but I think we're at a place of acceptance with the market regarding the rate, where buyers know that they have this looming rent that is 100% interest rate.
That's what I always talk about too, is like the 100% interest rate on renting as opposed to, 6.25.
Right, and that's really helpful, and it really I mean, we all hear horror stories after horror stories about people that found out they got 3 months to get out of their apartment.
Sometimes not even that. My
Yeah.
son was renting $2,700 a month and they said, you've got 30 days, we will sell the property.
Oh my goodness, 30 days.
30 days, you have 30 days.
So that assessment is even helpful as a safety guard, even if you're not ready to buy right now. And I'm hoping just to put tools in your toolbox that'll come back to you at certain points. We hear everything about rates. We can project that they're going to drop to the 5s, or I'm hearing after third quarter. So it comes down to a couple of things. I talk to people, depending on who it is, about investors buying up properties right now. And it seems that there is going to be a renter class and an owner class more and more. And getting your hands, I use the language, getting your hands on dirt. It seems something about the visceral language of that, people just get it. Like dirt that you own, that people can't just take away from you. And just that tipping point to help them not get in a situation where they have one, and then they start the process, and they only have 30 days to get out. So those are with your renters. With your buyers, we're seeing finally now simultaneous closings are coming back. So I have one tomorrow, and that means somebody in Volusia County in Edgewater put their house on the market contingent and offered a contract contingent on the sale of this house. They need the funds from this house to pay for this house. It's been a while since people had confidence that I've seen in this market that they can sell and there's a home available within 45 days in this case. But we're starting to see them again. It's been a long time since I saw those. So even the hesitancy about where do I go? That's a really tough question that you guys are more equipped to answer than I am. How do you handle that, Scott?
I had one that was horrible. The buyers really wanted this place in Titusville. And the sellers were not confident that they could replace that home. So we allowed them 60 days to look for a replacement. They never found one. So we were all out our time and they got their deposit back, but it was tough.
Yeah.
I would say that since last January, we've gotten 150% more inventory. And so there are choices. And what I do is if I get somebody that really wants to be in a neighborhood, I send letters to the neighborhood. Say, I've got somebody that's really interested. They're a real person. I'm not pulling your leg.
Yeah.
And they want to live here. Are you close to wanting to sell?
Wow. That's great.
Yeah, and it works.
Yeah. And you might actually get some other listings, I imagine,
Yeah.
possibly.
Yeah.
Wow.
Worked out okay.
And in markets like this, ingenuity begins to emerge. And I think you're going to see this more with loan programs also. Right now, the traditional cap, they went away from 40-year mortgages. Traditional cap is 30-year. But I think you're going to see more 40-year products come on the market. And what that does is it increases the amount of buyers who can buy a property. So instead of the loan being over 30 years, and people typically are not going to stay in it for the term of the loan. I think 7 years is the turnover. Any stats I throw out like that, just know they're probably made up on the spot. So it can be,
No, it's actually shifted a little bit. I would have thought we'd be more or transient, but it went from 5 to 7 now till maybe it's more like 8 to 10,
Okay,
that people are staying in their homes,
yeah. So
believe it or not.
when they're looking at that 40-year versus 30-year, what it's doing is increasing affordability to offset the higher interest rate. And if you guys have noticed, homeowners insurance is going up in Florida, that challenge, and then property taxes, especially we're seeing that in Flagler County is getting interesting with that right now. So ingenuity and innovation, hopefully learning from what happened in 2007, 2008. And those safety rails are definitely in place, as far as I can tell. When somebody asks you and compares what's going on now, 2007, 2008, what's going on now is not a byproduct of the real estate industry. It's a totally different thing. And back then, those properties didn't have equity in them, which now, still in Central Florida, we're holding our equity, increasing our equity. So there's a buffer there for people who are going, the potential to go under like they did in 06, 07, 08. Who owned a house during that time? Anybody experienced that? It was a wild ride then. So once we get the pre-approval process, and we've done trainings on that, but that process is processing the application, documentation. That we need is tax returns for the last 2 years, pay stubs last 30 days unless they're self-employed, and bank statements for the last 2 months is the initial documents that we have to have in the W-2 to begin to process that before we can submit it to process. Another thing that we need in that process, as opposed to a pre-qual, is for it to run through an automated underwriting system. So underwriters are people in our branch. We're blessed in Jacksonville to have our underwriters in our branch, which is why we can close loans, like I shared earlier, in 11 business days. We're not allowed to access them because you don't want loan officers being able to knock on the door constantly of underwriters. It's two totally different personalities. But they're the ones who process the loan and operate just in paperwork and approve it. Before that happens, though, there's a pre-underwriting system that the application is run through that you get approved eligible on. And then once you get that, it's a pre-approval. A pre-qual is when I get the application, run credit, good credit score, I look at the application, but nothing's verified, that's a pre-qual. So it's two totally different processes. So some tools for you to ask if you have a listing appointment or with your buyer and you're looking at this pre-approval form, without prying, you can just say, did they request your tax returns? Or did they request your pay stubs? Those are simple questions that you don't have to go any further than that, that you can know if those things weren't requested, then it's a pre-qual. If they were, then you feel confident that they're doing their due diligence and it's a pre-approval. So just something to have in your back pocket, because your time is valuable. That's why I'm really thankful you guys are here today, because your time is really valuable. And protecting that as much as possible is key. And knowing the difference between a pre-qual and a pre-approval is part of that really, really key process. Once we go under contract, though, I receive a contract, my team does. We order a title, we ask to get some quotes for insurance, and we process that file. A good thing to ask your lender at that point is, do you need anything from me or the buyer? A lot of lenders love to not talk to realtors. Not because they're just trying to figure out how to keep their day as simple as possible, I guess. But so sometimes you have to initiate that conversation. And initiating it on the front end helps when things go wrong. You've already talked to the lender, you already know them. So we call it the fog of the deal. If you'll have some cases where you're walking through some deals and it just gets wild. And you want to know, okay, I can talk to them and get communication about where we're at, make sure it's closing, and can I help with anything? What this means is the processing team is preparing it. And as you can see, the title's been ordered, the appraisal, homeowners insurance, and work verifications and other required items have been set up. So with COVID, we had to move to a system where that afternoon of the closing or that morning of the closing, or at least 12 hours before the closing, their verification of employment had to be done. That's making sure they still have a job. Why was that important during COVID? Because, yeah, a lot of people are losing their jobs. This has been adjusted a little bit, to now 24 to 48 hours, so there's a more of a window. But these are things that are being done behind the scenes on their side. Your loan has been submitted to underwriting. When you hear that, has it been conditionally approved yet, or has it been approved? It is not. Well, I have a pre-approval. Pre-approval, it says approval on there. Until it goes into underwriting, the bank has not said, we can do this loan based on these conditions. So submitting to underwriting, we have title, we have the appraisal, the other items that the lender thinks they're gonna need. And here's a good time to ask, what is the turn times right now on the underwriting submission? So those simple questions will eventually allow you to be markers for planning when they should be getting back to you. Does it stink to have to babysit the lender? Yes, it stinks, but it's your business. And there's a healthy paranoia that comes with your business, and that gives you peace as long as you know these steps are going on. The underwriter then looks at the file and they vet everything, and they'll either give a conditional approval or they'll suspend the file. If they suspend the file, it means that they don't see how the documentation works, it needs to be restructured, maybe the loan program needs to be changed. You don't want to hear that. If you get a conditional loan approval, a lot of times I'll have agents think, okay, we're good, it's done, we got conditional loan approval. Conditional loan approval is saying, the bank's saying, we can do it, it can be done on the condition that we have these other items. You will very rarely not get a conditioned loan approval, because there's items that just take time, like the appraisal is a big one. That'll be on a conditional loan approval, no matter what, unless the appraisal is waived. We have some recently that have met those qualifications, but typically it'll be the appraisal. Binding your homeowner's insurance. So before closing, you're gonna have to participate, helping your lender, possibly helping your lender to bind the homeowner's insurance. Hopefully the lender has a relationship with the client enough to where they're getting that information from them and you don't have to deal with that. But there are times, especially if you referred the agent, where if there's a lag time, I get on the phone with you and say, hey, we got to get this person to get this binder as quickly as possible. Let's say I have a quote and there's a hurricane coming. What are some dangers? So I have a closing on Wednesday, there's a hurricane coming on Thursday, and it's not bound yet. And we're getting close to this box. What do I need to do as soon as possible with my client when a hurricane's coming? And we have a closing within possibility of a week of the hurricane.
Got the insurance lockdown?
Yeah, because what happens, anybody, did they cover that? I don't know if they cover that tonight. What happens when it gets inside, they call it the square, the box?
Box.
The box. They can't find insurance here. They will not. And then you get into re-inspections, those kind of things. So as we're heading into the summer, especially tail end of the summer, hopefully we miss on hurricanes. We got enough this last year. But these are things that kind of cross over. There's things that I'm not going to share with you guys because I don't even want you thinking about them, because your lender's doing those things. But these types of things, these markers about what does submitted to processing mean? What does submitted to underwriting mean? What does conditional loan approval mean? Those are good markers for you to just have in your mind as part of the loan flow process. So if I had a circular chart here, what I would do is pre-qualification, under contract, submitted to processing, submitted to underwriting, conditional loan approval, and then what are we all waiting for? 3 favorite letters? Clear to close, yeah. CTC. So CTC, you hear people say that like everyone should know what it is. But it means clear to close. So that means you've gone through the full cycle and you've resubmitted to underwriting. So you met the conditions that they have. Your loan officer has provided those to underwriting. They've reviewed those things and then get it back to you. There is elements of our industry that are going to drive you nuts. And one is the amount of time from clear to close to letting the people know what to wire. before closing. Yeah, it seems like, when I started this, I was like, there has to be a better way to do this. Surely I'm not the first one to think about it, but we love getting the clear to close 10 days before closing and moving it up. But it's not uncommon to get a clear to close the day before closing. And having a team to be able to work with your client to figure out how much to wire. And it is nerve wracking. But we keep a straight face and all that and try and keep it calm. But that's not unusual to have that experience towards the end of closing. Hopefully the lender you're working with has their processes streamlined and they can even rush files through closing if needed. But these are all kind of things to be aware of throughout the loan process, the loan flow. That's where the fog of the deal, not fog of war, I don't want to use too much of a term, but that's where it comes from. Go ahead, Scott.
Is the clear close for the final CD 72 hours, or are they synonymous? 72 hours before close.
Great question. So up until title does the final balance for actual figures, the bank is working up estimates. And part of the compliance process is for 72 hours before closing, a CD has to be sent out to be signed by the buyers. Now, when I was in the industry before in 2006, they didn't even know what was on that until they're at the closing table. So it wasn't uncommon for lenders to gouge them in that pressure moment and dare them to walk away from the table. That was not uncommon at all, right?
It was horrible.
It was horrible, horrible. Talk about some PTSD, horrible situation. So now they implemented this where 72 hours before, and even at the beginning of the process, they get a loan estimate also to get an idea. And a lender, if they're smart to protect themselves too, they inflate the closing costs. So that when it does come around, it's less money than what they were thinking. And everything has been vetted. So 72 hours to be able to close, like I have a closing on Friday. They sign that pre-CD. I call it pre-CD just to help them with the language a little bit. Because typically they're expecting it to be the exact numbers of closing. So we have to walk through that a little bit. The title hasn't gotten to it. But that has to be sent out and signed 72 hours before closing. But the file does not have to be clear to close for that to be signed. So a great question for you that I could add here for your client or to the lender, hey, has the CD gone out yet? Has the pre-CD gone out yet? Because if it hasn't, that lender knows it's not closing on time. And you might be thinking, well, why don't we know this ahead of time? Well, that's a question you'll ask a lot in this business, unfortunately.
So that is a must happen. It has to go out 72 hours,
Must happen.
but you
At a
said.
minimum.
at the
No,
minimum.
yeah, it can be before that.
But you said clear to close does not have to be issued for that to go out.
Correct.
Okay.
And so the clear to close can happen. We've had them where something delayed it, and that happens the morning of closing, and it's out that afternoon.
Okay.
Because that's not a compliance thing. But if that's not signed, the only workaround is to print it out and have them back sign it. So there is a workaround, if your lender's on the ball about it, to get it to them to sign by hand. They won't be able to e-sign at that
Right.
point because the date has to be backdated.
What does the CT stand for?
Clear to close.
Oh, I knew that. I thought it was
A
a
CD.
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 Closing disclosure.
Closing disclosure.
Okay.
Closing disclosure. So what'll happen in that process is right here, we've got the pre-CD went out. And we don't have the clear to close yet. We get that the next day. And then the lender begins to work with the title company to balance the CD. You'll hear them say that, balance the CD. What they're doing is they're going back and forth with fees until they agree that these are the actual closing costs. Until that even begins, you can't know what the actual closing costs are. So there'll be situations where somebody's like, well, I'm traveling, I don't have access to my bank, and I can't wire the exact money tomorrow. Your lender can give them an overage amount. And this is something that happens very common. They'll give an overage and they'll estimate whatever's on the pre-CD and add like $2,000 to it. And then at closing, the title company will wire back to them the difference. So if you get caught in a situation like that, ask the lender to provide you a number and make sure they do it. Don't you text it to them. You want them on the hook for it. You want distance from these kind of things. So you want them to be the one to send an overage number to your client so that you're protected and you're not emotionally involved in all that stuff. You got enough going on with the final walkthrough and all that stuff. Where they have given that number, and that way, if that number comes in low for some reason, they're not looking at you at the closing table. It's on that lender. This kind of relationship is important for your own sanity. To be able to walk out on your side of the street and make sure the lender does their job. So I have because of relationships here, there are personal relationships where I'm their guy. But even though I'm their guy, we have separation. And one of the reasons I'm their guy is I protect them from that stuff. So there's no spillover and they can have the nurturing relationship where even if that client is not happy for some reason at the end, it's not blowing back on the realtor. And that realtor can continue with that database and working through that. So pre-CD, 72 hours, still estimates though, except the rate and the payments are on there. That should be accurate, down payment should be accurate, but the title fees, state fees, and escrow should be accurate, but the title fees and state fees are gonna be added. CTC, clear to close. And then balance. And that's where the loan company, the financer, is handing it over to the title company. And the title company now will send out the final closing disclosure with the actual fees on it to your client for them to review. So the first time they're seeing that is not at the closing table. The actual one is not at the closing table. It may be a couple hours before, but there should be no surprises at that closing table. And they sign their documents, and there's one more step that can get really annoying, and that's waiting for, anybody know? Yeah, waiting for funding. Yeah.
I just had that happen last week, like,
Oh,
Like what
it
happened?
was terrible, it was.
You run out of stuff to talk about?
They, well, luckily I'm like pretty close with my clients, but, they have this little bank in Tennessee that they deal with, and they
they're
were
wired.
supposed to,
Okay.
they were supposed to get it wired, and for whatever reason, they got two separate wires, so title wasn't looking for two separate wires, they were looking for the one with the full amount, and then the bank actually only wired one and not the remaining balance of it. Then they had to call back at the closing table, get the remaining balance wired. Then it was, they didn't have those funds in it at the moment because they used a cashier's check to deposit. It hadn't cleared yet, so they had to take it from it. It was,
Oh, wow.
Yeah.
it was a nightmare.
So
It was terrible.
it's good to share this. So you know you're not the one when it happens to you.
Yeah.
But then there's another wire you have to
Like
wait
my
for.
beer at the closing table and this shit. starts
So that's
falling.
is that for their closing costs, that wire, or was?
It was the whole.
It was the
cash
fund
transaction.
alone. Okay.
Yeah.
Oh, it was a cash transaction.
Yeah,
Yeah.
and that shouldn't have been that difficult, but.
Right.
it-
This stuff, well, on a finance loan, you'll have it where after they sign everything, the title company has to send the docs to the lender. The lender has to review all the docs, all the signatures, and then if they need anything that was missed, they go back and forth a little bit. So everything's been signed, you're sitting there with the keys, you're ready to take the picture, and now it's an hour. Now it's an hour and a half, now it's 2 hours. Make sure your lender is in communication, if they're not at the closing, make sure they're in communication to help the title company call the funding department to get some answers and find out what's going on. Because especially if you're closing at the end of the month or right by a holiday, the Fed can get crazy with that Fed number, and navigating that can be challenging.
I always try to get my buyers to wire it the day before. So that the one person at the savings and loan isn't on lunch break when they need to push that button.
Yeah.
It's just so painful, and it's easy to remedy if you just do it in advance.
So painful.
It
So
really-
you,
Go eat lunch and be.
Oh, that's-
Like,
yeah,
you're gonna
it's-
eat lunch in between the second wire coming through, like.
I'll say that's not uncommon though, so have your game plan for that.
Yeah.
your backup plan. Cause it's not uncommon for me to give all of my energy to that first hour and a half. And then we're just sitting there, we run out of stuff to talk about, they're frustrated, all that's going on, the title company has somebody else to go in there and sign next. So yeah, getting a game plan together, and the best way to buy time is, let's go have lunch.
Yeah,
Can we go get a coffee? Can we go get a drink or a beverage or something? Go get ice cream, whatever, to get the flow, and the title company will call you when it comes in. So these are things to troubleshoot that you're gonna come across. At some point, you're gonna come across these things. So we have clear to close. We just covered that one. We sent the buyer the closing disclosure. That's what, and Scott just set this up. We planned ahead of time. So let's see if you guys remember Scott's answer to this. CD must go out to the buyer and be signed how many?
1 day.
3 days.
3 days prior, so 72 hours. It's not the final CD. We talked about that. And we can't talk to you about that. It's illegal. Sometimes lenders like to do this because they don't want to give you bad news or tell you the whole story. So you can just read the notes there. Original claims that cannot share information like appraisal, CD, information about the loan, reason for denial, etc. That's false. If you have a loan denied or turned down, you can ask for the reason why, and often you'll need the reason why. It may be a letter to get that binder back. Or else they have no leverage to get that binder back. Especially if you're dealing with a big company who you don't know personally, and they're just there 9 to 5 answering the phone. It can be hard, and they might just draw these lines on stuff. But I encourage you to push back on that just to see if you can get more information for your client. If they're hardline about it, every company has different guidelines. I definitely respect and understand that. But if you're working with Bank of England, remember Steve Tufts is the mentor to my boss. So there is a huge relationship. We're the preferred lender for every one of Steve Tufts' branches, all the way up. So you have a lot of leverage with my company. You have a lot of leverage with my company. So that's one of the reasons we cover the fee that you guys have. It was immediate. You guys voiced it. Hey, we want this taken care of. So we cover that fee if you close with us. The branch fee, I forget what it's called now. Brokerage fee. But you guys have a lot of leverage. So when you're at Summit, you'll see my boss there. You'll see other Bank of England people there. Understand, when you see them, you are their customer. You have a lot of leverage. You're their main client. So when it comes to, if you're working with anyone from Bank of England, you can ask for any clarity on this kind of stuff. But I would encourage you to push back with any company. All right, some terminology. DCI, you guys heard that before? Man, you guys are on fire with this. So can somebody tell me what debt to income is? Cover it up.
Isn't that how much debt you have, a percentage wise to a ratio? Yeah,
Yeah,
that. So what income you bring in? It
right,
has to fall under like a certain percentage for you to like qualify, right?
exactly, yeah. And we'll go, and when we do the other mortgage classes, we talk about how that's calculated. But what this means, if we have a debt to income ratio problem, it means that something may have happened during the process that pushed it up too high if they were pre-approved. But this should be really handled during the pre-qualification, pre-approval phase. And it's how you find out how much a property they can afford. So I've had some conversations with some in here where, well, they're right at the max of their debt to income for the program they're with. But from property to property, it might change. What are some things that affect the debt to income ratio on the property side besides the purchase price?
Your taxes, your
Insurance.
Perfect. Yeah, your taxes and your insurance and HOA. Yeah, so even though the HOA and the condo association fees are not part of the monthly payment for the mortgage, they have to be included in the monthly debt to income for the lender. So that's how we figure out how much they can afford. Whatever liabilities are imported from their credit report, so stuff like cable, doesn't matter, phone bills doesn't matter. I do have some clients who self-report, they sign up for a credit company that self-reports their cell phone data or something like that to increase their credit score. Maybe you guys are familiar with some of those. We asked them to remove those because it looks like a $200 monthly bill they have that's now connected to their property. So we can have them remove those items to help their debt to income ratio. But yeah, so it's imported and it includes also property taxes, homeowner association, and homeowners insurance estimates with that. The tricky one is student loans. So student loans are typically deferred, and that person isn't paying on them at all. But with the loan process, you have to count at least 5% of the total student loan amount towards their monthly debt. So that's where with the Heroes program, I see this a lot. We've run into it with nurses. Nurses have a lot of student loans. So sometimes they'll hit that ceiling. They make a lot of money, but then they have all the student debt too. So that's all in this DTI. If you hear somebody say AUS, that's that automated pre-underwriting system. So if you hear them say, hey, we ran an AUS, what you should actually say is, what is an AUS? Anytime a lender says anything you don't understand, they're just caught in their vocabulary of their job. So it doesn't mean you have to remember that. I just want you to be familiar with it. This is the pre-underwriting system that all companies have. They run it through. Field review. So somebody goes out and do a field review. This popped up with COVID especially, where appraisers were swamped and couldn't get out the properties in person. So if you were putting a certain amount down, I think it was 10% or more down, you might qualify for just a field review, where the appraisal is done because there's at least 10% equity and they don't have to go out to the property. This kind of also included this is you might have a re-inspection for a property. So we're closing tomorrow on a house that had to get a roof put on. The appraisal was done before the roof was put on. So the appraisal says, it doesn't say what we want, which is there's a box on there that says as is. So when you get an appraisal from your lender, and they should send it to you and the client, if you're representing the buyer, you want to look at the price it came in at, and then there's a little box next to it that says as is, or there's a box next to that that says subject to completion. You know, if you're doing a new roof, it's gonna say subject to completion. And at the end of the process, as you get close to clear to close, once that roof gets put on, permit signed, they have to have the appraiser come back out and re-inspect it to then sign off that it's been done. So these are things that'll pop up through the loan process that you're gonna have to have just an awareness of, but the lender should be the one communicating this. You guys know what a conditional loan approval, right? It is it clear to close?
Yeah.
Not clear to close. And you guys know what clear to close is. It's amazing as I talk about this right now, a couple of hours ago, I'm looking at my phone still. Is it clear to close? Is it clear? I'm trying to focus on team meeting. So no matter how long you do it, there's still the intensity of the moment to, is there gonna be any surprises? Is it gonna be clear to close? Yeah.
So that would be my question, if you get the clear to close, has their employment already been verified again?
Yes.
Okay.
Yeah. So, and before that package goes out, it definitely has to. There are, in a branch like ours, there is some flexibility, especially if it's a Keller Williams deal. Where they can make it a funding condition, where they're not gonna hold up a closing, but they won't release funds for the loan until they have it, so we can get through that process. But typically it has to be done before the clear to close.
So what is your, and I guess this is kind of like off topic a little bit, but what is your like guideline as far as like doing anything after closing, like doing any sort of like refinancing on a car, or, you know, say for instance, if they want to finance furniture, or how long should they wait like after closing?
After closing, they can do whatever they want.
Yeah.
Yeah.
They could leave from starting.
Because I think sometimes that they should still wait a
It
couple.
may not be in their
days
best interest to do that, but after closing, the bank can't come back and re-audit them
Okay.
or do anything like that. Once those closing docs are there and it's funded, the bank has. Now, they might have an investor ask for a document later, we don't need to get into that, but they may go back and ask for a letter of explanation from an investor before they sell it, but
Okay.
typically they're on their own after that point.
Okay,
And sometimes, yeah, seen some crazy stuff. I've seen a couple get married for a VA deal before it closed so that they could close on the house. We're in a wild industry,
Say that
right?
again?
A couple got married. Well, here's the fuller story.
Yeah, give us the real deal.
So for a VA loan, even though the co-borrower has to be a spouse, it has to be married. It can't be a fiance, it can't be any other kind of part, yeah.
Son-in-law.
So to get the VA benefits, there has to be that connection. So this couple had been dating for years. And their mom was the agent, so it wasn't like a big secret thing, but it became a secret thing where they were supposed to get married 9 months later, but found a house they loved. So they secretly got married and didn't tell anybody.
Huh.
We had to provide the marriage certificate, and for it to close. And then we had the wedding 6 months later and nobody knew that they'd been married for 6
Okay.
months.
did mom know the age?
Oh, mom knew,
Yeah.
mom knew for sure, yeah. But yeah, it was a big secret, so there's creativity in the loan business,
And how long before?
and they're
like,
still married, so that's good.
what was that time frame? They got married, how, like?
They got married a
how
week,
fast did a week before the closing?
the only thing that took time was the marriage license, that was the only scary thing. And I had to get an exception from Quentin, my boss, to accept it on faith that we would have it tomorrow and it would still close on time. We'd have the marriage license. So he took a chance because he knew the agent also. But yeah, this is the business we are in to make a deal work. So that verification of employment is what we talked about earlier. The guidelines continue to change on that. I had somebody the other day meet on Friday and they just didn't have the income. They had the credit, didn't have the debt to income ratio. So what other options are there for them? Well, one is a non-occupying co-borrower. I close a lot of these during the year. And this is a family member who comes on the backside, behind the scenes loan. And they sign as a co-signer is a way to think of it. But it's very clear that they have their own residence, so it can still be a primary residence because they're a non-occupying co-borrower. And their income helps with the debt to income ratio. Now their debt comes into and their credit comes into. So they have to be able to fit in some categories there. But this really helps a lot of people get into their first home.
I have a question about that. Does their income have to support both mortgages?
Yes, yeah. So it's both
Like if
incomes.
they are a homeowner already and they're co-signer on this one, their income has to support both.
Yeah,
Another question is, I know a non-recourse loan is non-collateralized. How does it work for the co-signer? They're obviously on the hook legally
yeah.
for the loan to be repaid. So are they putting their primary residence at risk in any way?
No, so they can't go after their primary residence.
Okay.
However, their credit and everything can be damaged
Can be
if that
impacted
goes into
adversely.
default. Right. So the co-signer, yeah, without thinking this too through, I hate when it's being recorded because you can't brainstorm as much, but with if that happens,
I get it.
it's best for them to release that property to protect themselves.
Sure.
And or else it's never worth it to go after the other property financially for whoever that bank is. They're not gonna go after that, but it can damage their credit, it can damage their profile with that. So there is responsibility. It's not like a no risk at all for that.
Doing that at all.
So your kid, your cousin, your nephew, they could jam you up
Right,
after you've been a good person to help them get this out.
absolutely.
That
So
sounds
yeah,
like a terrible idea.
there can be another side to this. But I haven't heard any horror stories yet, but maybe if I did, I wouldn't tell you guys. I gotta watch my bias, so I'm coming from a specific angle.
So the work number that's in caps, is that a number that banks call to verify employment?
Yeah, so there's a system on our application, and the program's called Work Number.
Okay.
And during the application process, most companies participate in this, and we can request it, we pay for it, and it shows the work history and then what they made previous years to get their salary, and allows us to verify what we're seeing on paper as well. Yeah, so work numbers should already been put through, and it helps with the VOE also, right there. Although it's not sufficient to cover this, they still have to reach out to the employer within, I think right now it's 48 hours of closing to make sure they're still employed there. But that can also be not just a phone call, it can be other things like an email or direct request to them, because different companies have different systems. Anybody know the difference between a mortgage broker and a mortgage bank? Besides Scott, go ahead.
A broker deals with a whole lot of banks, right?
Right,
Whereas a mortgage banker deals with one.
correct. Yeah, so Bank of England, which has no affiliation with the Queen's money over there. If you haven't heard this, it's part of what I go through this a lot. I'm sure I hit all you guys up with this. But yeah, in 1890, a small town of England, Arkansas, the bank started. About 30 minutes outside Little Rock. That's why our headquarters is in Little Rock. The reason why I'm so good at presenting that is it's not the best marketing move to be a foreign bank's name. But it came from that, and I guess in the 1890s, they didn't worry about that too much. We never got bailed out during when things went under in 2008. And because of the way we're structured, we're protected from a lot of defaults that are going on, because we're also an agricultural bank there locally. So we have a lot of our own money that we're able to lend. Where if you're a broker, some of my friends that were brokers here locally when COVID was going out, they're like, hey, we really have a line for like 3 more weeks. We're not sure where money's gonna come from. So they keep a line of money going where mortgage banks use their own money. Now, we do broker out deals if we can't handle them in-house, but what we lose is our control over the deal. And one of the things that makes us really special is our control over the deal. So from start to finish, that person never talks. I'm never out of the picture. Whoever the loan officer is never out of the picture with them. The underwriters are in the branch, the closing department's in the branch. So it allows us to navigate that stuff in-house. Once we broker a deal out, I made great friends with the hardest deal I ever made. It was a broker deal, and it was bank statements from an independently owned property right at the tail end of COVID. So it is a lot more work to get those done, and you can't control the process. So you're beholden to them. Now, let me just say this, because I have some very good competitors who are brokers here. So it doesn't mean they're not great. Some of the brokers in town are great. They figured out their processes and they're great at what they do. But it's good to be able to distinguish those when you're talking through that process about mortgage brokerage, mortgage bankers. How are we on time?
So you have the bank, you have the mortgage bank.
We're the mortgage bank.
Can I ask you a question?
Yeah,
How, like, when, what's up with the lock, like at the end, like almost like the fees, right?
Mhm.
Also with the interest rate.
The rate lock,
Yeah, so when do they lock, does the rate get locked?
great question. So I have somebody who's pre-approved right now, but doesn't have a property yet, but they want to lock, because let's say there's a little dip in the rates. Can we lock now? We can't lock now because the lock is connected to an address. So it has to be under contract to be able to lock that rate. So during that window, I mean, it gets dicey.
Yeah.
When I came back,
how long does the rate lock last?
you have a choice. You can go a 40-day lock, but the pricing's a little bit tougher on those. You can go 30-day lock, pricing gets better. You can go 15-day lock, pricing gets better, but the risk gets more and more, because now you're 15 days from closing and it's not locked yet. And then everyone's starting to get nervous at that point. During COVID, we had 7-day locks because the market was so volatile, you couldn't count on a lock for 14 days or 15 days. It was so wild. So we did 7-day locks, and adjusting to that.
What do you mean according to pricing? Does it cost to
Yeah.
lock it?
No, I wish I had a slide that I sent out to my borrowers, but if you look up, this isn't mirrored, is it? Oh, I can't get into theirs.
Are the fees expensive?
Let's talk about this. So there is no fee to lock the loan.
Okay,
Some companies will have a lock fee. That's a fee that they have for their company. But let's say par rate, we're about to play golf. What does par mean? If you're par in a hole,
You're like pretty
you're
even.
even. So you'll have a par rate. So let's say par rate on a deal we had last week was 7.25 was par rate. Then, as a bank, banks will go in what's called the hole, a certain amount, and they're willing to pay for that person's business without charging them. So typically for us, we can go, it's hard without numbers up here to see it, but we can go 0.8 in the hole, which might quantify to like $2,500, depending on the loan amount. And then that's what we know we're approved without talking to my bosses about. Then if I go to them and say, hey, we're competing for deals, and especially right now, they're willing to go point, or not, but they're willing to go more in the hole without charging them. Communication with the client, for me, I don't want to come across as a car salesman. I have some friends that are car salesmen, but I don't want that perception.
My husband.
Yeah, so.
When you got to say that.
Or the perception of it regarding rates, like, no, this is what it is.
Used in there.
This is what I don't want them to feel like, hey, hold on, let me go talk to my manager. And then I walk around and pretend I'm talking to my manager, and then you come like, I'm not saying they do that, but I feel. Okay. I wanna make sure, especially we're in this intimate, intense process, that I need their trust. So I'll actually send them the pricing sheet that I get, and it's not specific, it is specific to their profile. So let's say they saw online 6% mortgages conventional. That is to get the person to call. Your rate, if you're going through the process, is specific to your profile. So it depends on your credit score, how much money you're gonna put down, how much money you have in reserves, assets, what is your DTI, all of those shape, and in the loan program, all of those shape what your specific interest rate is. So we know what par is, we can go more in the hole. And then we talk to that person about, do you want to buy it down? So you hear that term, buying down the rate or paying points. Probably hear that more, paying points. So paying points means, okay, this is what I can do as a bank. So that person said 7.25, we locked her in at 6.625 2 weeks ago. And then she asked, well, how much would it cost to get 5.875? And I show her the pricing list and show how much she would then have to pay to buy that down. And then the conversation is, well, it would cost this amount to buy that down. This is the difference in your payment. This is how many years it would take to break even. Do you plan on staying in the house that long? Does it make sense? Or would you rather use that to get rid of some credit card debt to bring your monthly budget down more in the household instead of being on the payment? Yeah.
So when you buy down rates, is that buy down money included in like your closing costs?
Yes.
Okay.
Now, here's something to watch for your clients. So it's not uncommon for me to be in a competitive competition with another bank, and I'll ask for a copy of their good faith statement or their loan estimate, and they're killing me on the rate. So my rate might be 0.5 point higher, but then when I look at the fees, they don't disclose that they're charging $4,000 to buy down and get that rate. They don't have to disclose that. I mean, it has to be on there when they send out the lock request and those things, but during the pre-approval process, a lot of people just don't disclose that to your client. So that's where I win in a lot of those cases is I say, look, this is our fees. So what are our fees? $9.95 processing fee, $2.95 underwriting fee, no matter the loan amount. That's our fees. We can do that because we're a bank and we handle our own money. So we make money. It took me a while to figure out how they make money. It's on the back end. It's on the back end where the bank recoups that. So if you're a brokerage, you're not selling your own loans to investors. So you don't have the opportunity to do that. So they have to make it on the front end, is my understanding. But the tangible thing, so buying down, paying points is not a bad thing if it makes sense and if the client knows they're doing it. It's not just rolled in, because a lot of times it won't be disclosed until after the appraisal's paid for, the inspection's paid for. They're already over $1,000 invested in this property,
Mhm.
and the lender knows they have the money. And the pressure builds up for everybody, and switching lenders is not an option. So that's the thing on rates, paying points. I think the best communication possible is the best way to go. Transparency.
I don't know if it's really like a platform to do that, but I've seen like people say that they're working with the buyer and they've gotten the seller to agree to buy down points. Wouldn't that be the same thing as like just a portion of closing costs being covered?
This is a great question. Yeah, so it is similar. So let's say I have somebody with a lot of money and they wanna buy down as much as possible. Because of guidelines, the most they can buy down is what's called, so when I say points, like 2 points, it's not 2 points lower the interest rate, it's 2 percentage points of the loan amount. Is what that means, that's the figure. So they are limited with guidelines to protect them to have all broker fee, lender fees, and buy downs to be under 3% points. So really, they can only buy down like 2.5, 2.6 points. But they need to get it lower to be able to make the payment that they want to make. The seller can buy it down as much as they want through seller concessions.
Oh, so they could keep going.
So they can keep going,
They could drive it down to 3.5%.
yeah, until the lender taps out, because they want to make sure they're making something on the interest rate. Right, but yes, so there's not a cap on that, so that's where you get into now 2-1 buy downs are an option. And the way that's written in, and a lot of the 2-1 buy downs that I've had accepted offers. It's interesting, as we priced it out and went through the process, it was better to do a permanent buy down. But they could buy it down further than they could if they were paying for it, because it's a seller concession. So the way that's written is towards prepaids and closing costs, right?
Yeah, I always wrote it. Closing cost points and or prepaids.
Yeah,
That's
that's
how-
good,
that's like-
good umbrella. Because now you can use that money for almost anything except for the down payment. Remember, seller concessions can go towards a down payment, they can go towards prepaids and closing costs.
So say for instance, on like a conventional loan, you can ask for up to 3%. Right, so you would just word it as seller agrees to contribute 3% towards prepaids.
Up
And
to,
costs up to 3%.
yeah, because if you use up to, then if it's off by 3 cents, they don't have to rewrite it. So they'll use as much as possible.
Okay,
And I always make sure to put in, 'cause it's easy to forget, up to 3% of purchase price. Because otherwise, if you say 3%, it's 3% of what?
They could say it's a loan amount.
heard.
Yeah,
And
yeah,
usually
so,
it's, okay, yeah.
so seller to pay up to 3% of purchase price for its closing costs, points, and or prepaids.
Do you recommend personally buying down? Do you think it's worth it? Like,
It's case by case,
yeah,
yeah. So sometimes buying down is so that they can get their DTI down, their debt to income lower, so it has to be done sometimes. Sometimes, if they want to stay in there for 30 years, it makes sense. Sometimes it's to take advantage of the seller being willing to give seller concessions, so you might as well buy it down.
Yeah.
Using their own money, just like that math I worked out with that person the other day. Okay, so in that case, it was 3.5 years to make finally break even on the money she was gonna pay to buy it down. And her plan is to sell a condo and pay that property off in 2 years or less. So it doesn't make sense.
yeah.
It would be a waste of money.
Or if they plan on refinancing down the road.
Same thing, yeah.
Right? You wouldn't-
Cause then they could use that equity or use that money to buy it down then if they wanted to. They would have that option.
Like, and I may be overthinking this, it's very likely, but how would title know, like, if you're asking for up to 3% of all those things, how does title know where to contribute those funds?
The lender.
That's when they balance.
Okay.
So the closing department from the lender starts sending, it's happening right now, sending emails back and forth with these settlement statements. And the lender's putting their fees and where they should go, how the company's putting their fees. And then they're trying to make sure they all match and make sense for
The
both
lender's
sides.
letting them know like, hey, we wanna buy down points and that's kind of what we're doing with this percentage.
Yeah, and there's things, some things the lenders don't wanna know that you might have on an addendum, and we don't want that addendum.
Yeah,
So like, we don't wanna know maybe that a water heater is being replaced out of the seller concession, because it's too specific. And there's no need for us to know that, so that can be taken care of by the title company, without the lender being aware of it happening. Keeping it as clean as possible.
got it.
But the lender will tell you, so. In that processing stage, when everything's being reviewed, it's not uncommon for me to call up the agent, to say, hey, can we have this addendum kind of rewritten? And remove this, it doesn't remove it, but have an addendum where it doesn't
Included.
allocate this, or maybe it's too specific on what the seller concessions we're going to. Can we have it more general language, like the kind that Scott just said?
I had to
Those three
review
items.
one, back in February because it was a cash deal, but. So there wasn't a whole lot of like financing charges. So
Mhm.
like the day of closing, we had to like reword it and get it back over to title so that it would
Hmm,
bring down what the buyer actually owed and need to wire.
right, yeah,
Cause they were willing to contribute up to a certain amount. I think it was like $6,000. Well, there wasn't $6,000 in closing costs on a cash deal for that, so we had to reword it on the addendum.
okay, yeah, so, and that's the nature of. When I first
Yeah.
started, I'm like, give me the book to find out, how to do this, where I know every step.
Yeah.
And no matter what we learn, it's still improv at a lot of points.
Can I just say that to someone that has not sold a home yet? This is a lot, this like, everyone's always like throwing out all these different scenarios of how.
And that's where it gets
Yeah.
dangerous,
I
getting
feel like it's
bogged
never
down by that.
ending, though, like what could happen, you know?
It's scary.
Like, oh,
I was curious if, so intuitively, it sounds like it would be beneficial, like if I was working with a mortgage broker. Or an insurance broker, they can go out and shop the world and get the best for you. But what I was curious, because I know you have value that you bring that those guys don't. So could you just say what that is? Is it relationships? Is it that you guys service your own loans?
Yeah.
Or what are some of those things?
Yes, thank you for setting me up right there, sure,
Ah,
appreciate it.
Good job, that was
Yeah.
great.
But I'm curious too.
The process from start to finish, there is no handoff at all. If I have a question for an underwriter, if one of these deals closing this week had a gap of employment. Before during the pre-approval process, I reach out and meet with the underwriter, how would you view this income? Or when something comes up, an issue, I can go to the underwriter handling the file and say, how can we troubleshoot this right now? Our rates are gonna be competitive with any broker. The process from start to finish being clean is the thing that I've seen the last 5.5 years is the biggest advantage. As Keller Williams agents, then you have leverage with Bank of England that even other agencies don't because of our relationship. We're the #1 lender in Northeast Florida and only have 53 employees. #1 mortgage lender in Northeast Florida with only 53 employees. So what does that speak to? It speaks to culture, it speaks to process, efficiency. That's how I can stand up in front of you earlier today and say, this is a finance deal, 11 business days. We closed one last month. 12 business days, we're closing on Friday this month because of that process. Now, that is because the buyers were really on point and all that stuff too. And you guys know, I have nowhere to hide. You guys got me from start to finish. And I'm invested in your story. I want to leave you guys with two things. One, I have agents not understand when an appraisal comes in low, what you do. I just thought about this right now. This is a common struggle. And I just want to just go over this real quick. So your appraisal comes in low. We have a price point of 300,000. The bank can only lend off the appraised value. Appraisal comes in at 290,000. What happens then? Is the deal dead? No, it's not dead. So a couple things happen. Now, for the first time, the listing agent is gonna find out what the house appraised for. I never have known the listing agent to find out the appraised value. They don't wanna know it, because if it came in higher, it doesn't look great on them. They just wanna know it was good. But when it comes in low, we go to them and ask, can you provide some comps to get the value? That's the first process that goes back and forth. Then the seller has a choice to make. Okay, let's say the comps got it up to 295. We're still $5,000 short. The seller has the opportunity to lower the purchase price to 295. Let's say the seller's like, no way, I'm not doing it, I'm going back on the market. Deal's not dead yet. The buyer can pay out of the closing costs the $5,000 difference to secure that property. Another, well, we don't need to go into the other, but that's really the three overall ones. The deal is not dead when that happens. The deal is not dead when that happens. It's when negotiations begin. They have to weigh the weight of putting it on the market and maybe not have another buyer and pay another mortgage on that month, which might be 2,500, and they're arguing over 5,000, so that 2,500 can turn into 5,000, and so they have to weigh that out. The client has to weigh out, how bad do I want this property? I see there's a 4% at least appreciation historically on properties, so I'm gonna make that money back eventually. But that's what happens during that process, because I find a lot of agents aren't aware of that. A lot of seasoned agents aren't aware of that. And then the other thing I want to share with is just a home buying story for my family. You guys see Amber now and know her, but she was raised by a single mom, worked 3 jobs to get her out of the horrible situation they were in. And part of that legacy is her mom finally being able to buy a house, getting on her feet. And every day it was a new build in the outskirts of Memphis, Tennessee. Every day she went after work and looked at the work being done on that property, every day. Because it wasn't just a house for her, it was a house. I closed so many deals where when you hear the story, it's a rebuilt life. And it's a marker that I overcame. It's a marker that I did something. I mean, what you guys do is so important. And I know that doesn't get lost in Keller Williams culture, but in your industry, it does get lost overall. Keller Williams is really a special place with their culture. And what you guys do is so important, you know, that allowed my wife for her high school years to have a home. And an agent walked her through that process, and a financier was able to help with that side of it to bring this moment together. So I just want to encourage you guys. Right now is a great time for learning. I'm commissioned also, so I'm in it with you guys. That's another bonus for, I'm not salary. I'm commissioned with you guys too. So that's why a lot of times I'm not in the office all day because I'm originating. I'm doing the stuff you guys are doing. And I'm convinced that if we learn and love and care about people and continue to be the best servants that we can for our people, there's going to be value. And when deals go south and when they're tough, there's a big why to kind of hold your ground there. So I just want to be an encouragement to you guys too, and listening to myself. I'm going to share this right now. Really appreciate you guys spending the afternoon here. There's so many, especially after spending the morning here. Just really appreciate you guys a lot. Thanks.
We've got such a humble, I've enjoyed every single class that you've had.
Oh, thank
Yeah,
you.
It's good. Good
Appreciate
stuff.
you guys.
Thank you, Lance.
Yeah, thank you.
Makes us better agents.
And it's not intimidating to be in front of you guys. So that's good too. It speaks to what I think of you guys.
Time to go pick up my dog.
Is that part of your marketing plan?
No. No, it's just once a month in Port Orange.
What kind of dog is it?
Schnauzer.
Okay.
I would use my horse as my marketing. plan.
Horse.
Yeah,
Now you're talking.
yeah. Try to.
Wow. That would definitely work. When I was a kid, or in the beginning, I got attacked by wild dogs, so I always had a phobia of dogs. And Amber wanted a dog when we first got married, so we settled on a 3-pound, full-grown 3-pound teacup York. Except now I'm a 23-year-old walking around Miami, and she named it Chanel.
Oh, yes.
23-year-old guys are not the most secure, and no matter how much we try to look like it, saying, Chanel, come on. But it was like my transition dog. And I didn't, I still
She
didn't
named
really,
it Chanel. She
that
named-
was part of the name. The name was, it was when Nelly was out with all this stuff.
Yeah.
Chanel Merriweather Shake Your Tail Feather Morgan.
Oh.
It's her cool
my
name.
God.
But I got sick once and I had, and that's when I figured out, oh, this is what dogs do. And he just like sat on me and like, I began to get it. So, yeah, that was my transition dog to Magnolia.
Now you got, that's a goal.
Now you got a big dog,
right?
yeah, yeah.
I, someday, if I ever get another dog, I'm gonna try to take a break in between, but.
How many animals do you have?
Well, I had 3 schnauzers and now
Okay.
I'm down to 1. I haven't been without a dog in 20 years.
And then where do you keep the horse at?
At home,
Where is home?
Deland,
Oh, great.
yeah,
That's
yeah.
good therapy after work.
Oh, yeah, in the morning,
Yeah.
especially in the morning,
Really?
yeah, yeah,
Horses are just so cool.
yeah.
We just found out one of our chickens is a rooster.
Oh, really?
My
You
wife.
crowing in the morning, is that how you found out? Do you have animals too?
Mhm.
That's cool.
Only, we have one dog, we had 2, but we have 1 now. And a bunny and
It's got
4.
bacon.
They don't have
Yeah,
a
that'd be chicken.
dog with the
Yeah.
chicken.
That was great.
No.
I enjoyed it.
My wife.
We'll do something together soon.
For these chickens, like this huge coop, it's all decorated, like
Oh,
cute, got all out
wow, like,
with this chicken coop. And the dog has learned, and she's a people too, and she's like, she doesn't really mess with them. What does get her going, and I don't know if it's her trying to protect the chicken. When wild birds like get inside the chicken coop and are flying around, she goes fucking nuts. She will like just around, chase that bird around the chicken coop.
Protect
but-
the chicken?
yeah.
I feel
I
like
bet,
that's
yeah.
what it is, and I'm pretty sure though, if she were to get like face to face, one-on-one with one of the chickens, it'd be probably
They're next.
Kind of like this. I know we're not best buds here, but we're all fans, and I got a person.
I really,
Yeah.
I really think she would also bring.
So you're protecting your future view.
Right, right. But my wife did just order, cause where we live now, we're actually not supposed to have a rooster. And we thought we had 4 hens, like 4 chickens, but I'm pretty sure this one is a rooster. Cause it's crowing every morning, and so she ordered like a crow stopper or
So
whatever, like, it's like, it looks like a
Cock-a-doodle-doo.
a necktie. She's like, isn't it so cute? I'm like, that
Oh,
rooster's gonna tear your ass
He's
up.
like, I'm fine.
Oh, that thing on the-
Do you get your own eggs?
Not yet, so they're 16 weeks old, so within the next couple weeks, they're gonna start laying eggs, I guess,
Oh,
yeah.
cause then that's it.
Chickens have a lot of work too.
Listen, my wife was like, oh, as expensive as eggs are, I'm like.
That's what
You-
everybody must
You
do.
spend
I'm thinking maybe-
money on these chickens?
Oh, you totally, that's good. I'm gonna do that. 'Cause I was getting caught up in that, like, oh, we
No,
can
Like, what's the cheapest thing you buy?
Like every day I come
Oh, my
home
God.
and there's packages on the front porch and it's all these chickens.
Oh, my
She's
God.
got this thing
Project.
like decked out, this whole chicken coop, and
Oh,
she,
my God.
but she loves them, she enjoys it.
Yeah.
And
And
so,
you're gonna get eggs and you'll take it to your property.
yeah, when we get out there, we'll take it to the property.
You
for
can use
sure.
it in your marketing too.
Yeah, that's not a bad idea.
I'm bad at this stuff. So I'm encouraging you guys to do it. I have to learn how to do this stuff too. The social media, I have to get into that.
I'm getting better with it, and what I've recently learned through Command, like, we've got some really cool shit to
Yeah.
Some good resources there.
yeah, like, it was so, I've made my own few little flyers, and that is not my area, that's not my strong
I'm
point.
working on
But
it.
it's been so easy to get in Command and make flyers for social media, and they've got already laid out for you, I
Mhm.
literally just add our logo and add my headshot. And then I use
You
the,
print it out at home? Or here?
no, I put it on my social media,
Oh, that's right.
and then I use that
Yeah.
tap.
Yeah.
T to write my post. for.
Yeah,
It's
that's what I did. I know, I was like, oh, yes, this makes me sound
It's
wrong.
awesome. Yeah, I'm super excited about it.
I gotta go, girl. I love you.
Alright.
Yeah. Oh, I think that guy forgot his stuff. Okay. Bye.
I'm looking at like